When you buy your morning coffee at a local cafe, the barista will often hand you a little slip of paper. That piece of paper proves your purchase. But what about the cafe owner? How do they prove everything else that happens behind the counter before that cup even reaches your hand? In accounting software, that proof of action is called a voucher. Think of a voucher as a digital timestamp, a record that a specific financial event actually happened. To keep things organized, systems like Tally use 10 standard types of vouchers. Imagine them as 10 distinct buckets, each designed to catch a very specific kind of transaction. When you know which event belongs in which bucket, you move from simply collecting paper to creating an organized record of everything that happens in your business. Let's look at a local spot, the daily grind, on a busy Monday morning to see how these buckets work in practice. Before the doors even open, the owner takes delivery of 50 pounds of fresh, raw coffee beans from their supplier. To record bringing those goods into the shop, they use a purchase voucher. 2 hours later, the morning rush hits. The cafe sells 100 lattes and cappuccinos. Because goods are going out the door to customers, those actions are recorded using a sales voucher. This diagram shows the logic clearly. The incoming beans drop into the purchase column, and the sold cups drop into the sales column. By Tuesday, the owner needs to write a check for the monthly shop rent. Since money is flowing out of the business, this drops into a third column, the payment voucher. Later that afternoon, a local office pays the cafe for a weekend catering gig. Money is flowing in, so that event goes directly into a fourth column, the receipt voucher. These 4 vouchers handle the external operations of the business. Whenever goods or money cross the threshold of the front door, one of these buckets catches the record. Now it's Wednesday. The physical register is full of small bills. The owner scoops out the cash and drives it over to the local bank. The money didn't leave the business, it just moved from the shop's till to the shop's bank account. For internal movements like this, we use a contra voucher. On Thursday, a customer brings back a ceramic mug they bought yesterday because it has a chipped handle. To reverse that original sale, the system uses a credit note voucher. This chart shows how we handle reversals. On the left, the credit note tracks items flowing back from the customer. On the right, if the cafe owner finds expired milk and returns it to the supplier, the debit note voucher tracks that return. By tracking every reversed sale and returned item as its own distinct event, the software ensures your final totals match the actual money and inventory you have on hand. Sometimes a deal doesn't involve money at all. If the cafe trades pastries to a local print shop in exchange for promotional flyers, neither cash nor bank accounts are touched. That trade is recorded with a journal voucher. On this digital calendar, the owner might set aside a placeholder for end-of-month taxes. They use a reversing journal voucher for this, an entry that dissolves away once the actual tax bill arrives. Finally, there's the memo voucher. It acts like a digital sticky note for things like a quote on a future repair. It reminds you of a potential expense without actually altering your official books. Without these 3 specialized vouchers, you would have to record non-standard events in buckets where they don't belong, making your records inaccurate. Even with 10 standard buckets, a business might need something more specific. For example, an owner might keep minor hardware store runs separated from major rent payments. Build custom categories, like a petty cash voucher, branching from the main payment category to isolate small expenses. Or plan ahead. Use post-dated vouchers to schedule 12 months of future installment payments for an espresso machine, letting the system handle repetition automatically. This system provides a sturdy framework while giving you the tools to mold the software around the actual operational habits of your shop. Looking at this wall of sorting slots, you can see how all these individual actions are captured and kept in their place. Accounting is simply a chronological history of a business's life. Whether you are taking in cash, returning goods, or leaving a reminder for next Tuesday, there is a specific tool designed to record that moment. Next time you receive a receipt, you are seeing the very first step in a system that tracks a business's entire history.